Hey, this is Dr. Tom Carr, author of the IXTHYS letter. Today I'm going to show you all 6 steps on how you can find the best stocks for your long-term investment portfolio. Stay with us to the end to learn how you can get a free copy of all the reports in this series. So we've come now to the final video in this series, how to find the best stocks for your long-term portfolio. We've looked at 5 of those keys or steps so far. Today we're going to look at the 6th and I think the most important step in the process. First of all, we learned that strong organic sales growth is much stronger, much more predictive of forward price improvement in the stock than earnings growth, for example. Sales trump earnings every day of the week. And you want to look for sustained growth over 3 to 5 years, going back into the past, and organic growth, so growth from genuine improvement in product, building market share, buying out competitors, opening new stores, bringing new products online, that sort of thing. Secondly, we learned that not the price to earnings ratio, but the price to sales ratio has the greatest impact on stock price going forward. So we want to look at low price to sales ratio as we're screening out stocks. We want to look for relative weakness. We compared to the top 5 relative strength stocks in the S&P 500 and the bottom 5 relative strength stocks, and we've discovered that those at the bottom did much better than those at the top. So we want to find stocks that are not at the top of the list when it comes to relative strength, but are not that are underperforming the S&P 500, or have been at least. And we also want to look for companies with strong mission, with a strong mission statement. They're adding genuine value to the culture and society. We are lending them our hard-earned money, and I certainly speak for myself. I want to put my money into good soil. I want to give my money to companies that are doing good things with it, not building products that harm people or exploit addictions and that sort of thing. And then fifthly, we want to look at recent momentum in price. Now, relative weakness over the long term, but recent momentum in price. So over the last 3 or 4 weeks, these are stocks that are breaking out to the upside, that are bouncing off lows, that sort of thing. We also want to look for a really healthy, solid analyst opinion about the stock. So these are stocks that analysts give a buy or strong buy to. And we also want to scan the headlines of the major financial media outlets to see that they're printing positive stories about the company and not necessarily negative ones or cautious ones. Finally, the 6th step or key to building your best long-term stock portfolio is putting it all together. And this is something we're going to do just now. I'm going to show you my scanning process, my screening process, how I go about finding stocks and kind of whittling them down to a short list of stocks that I'm interested in. Now, I'm going to show you how to put it all together using this site, finviz.com. So what we're going to do now is build a very simple scan into the Finviz site, and this is completely free. I have a subscription, but I haven't logged in. So if you don't have a subscription, you'll be able to do everything I'm about to do here. I first of all would like to set my minimum price at $10 per share. I want to rule out all penny stocks. If you want to lower that to maybe $5 a share, that's fine. We're going to start at $10. And I'm going to set a minimum average daily volume of $300,000 per share. We don't want any thinly traded stocks. We want stocks that are on people's radar, not hiding off in some corner of the market somewhere. Now, with those 2 filters in place, we've already knocked our total universe of stocks down to about 2,100, and we're going to go further than that. Now, remember, we're looking for sales growth over the long term. So we go to this filter right here, sales growth past 5 years. We're going to start with over 10% on average over the past 5 years. That knocks about 2/3 of our stocks off the list. We're down to 773. We might have to fiddle with that a little bit, but that's a good place to start. We also want a low price to sales ratio, so we'll go up here to the PS ratio, and I'm going to start with a very low PS ratio of under 1, which means I'm paying less than $1 per share for every dollar of sales revenue that the company is earning, and I think that's a fair bargain. you might have to raise that a little bit if you don't get enough stocks in your list. But anyway, that's a good place to start. Now, it's a bit of a trick to scan for relative weakness. You can't really do that with Finviz. What we can do, however, is go to the relative strength index, which is a measure of the momentum of the stock, and we can set that to not overbought at less than 60. So that will rule out any stocks that are just shooting up high. And that brings us down to 123 stocks. And then we're going to, we can't scan for mission and corporate values. You're going to have to do that kind of work on your own by going to the website. But what we can scan for is some recent momentum in price. So we can go to the performance tab. There are two performance tabs here in case you want to put in a double filter. I just need one, and I'm going to say that I want something over the last month that has been going up. I think that's probably just a fair place to start. We can always fiddle with that if we want a little more performance. But we're down to 50 stocks now, which is pretty good. And then for the analyst opinion, we can go up here for the analyst recommendation tab, that filter, and we can say we want a buy or better. Let's see what that gives us. That gives us 37 companies. Okay, so that's a pretty good place to start. I, in fact, would start with 37 companies. I'd start checking the charts and so on. But let's get it down a little bit lower than that. Let's put our average volume up to 500,000. Let's insist that our sales growth over the past 5 years is 15%, and it gets us down to 15. Okay, so that's a great place to start. Now, the next thing I would look at just quickly is I would click on the snapshot tab right here, which will bring up small charts of each company along with some of its fundamental data. Not all of it, but most of it. The bigger, the more important bits and pieces are here. What I also like about Finviz is that it has mechanically drawn in the trend lines and some of the patterns, as well as some of your technical indicators on the chart, and you can see volume down below. And this is very helpful for determining whether a stock is technically poised to rise from here. And in fact, right off the bat, I like this chart. We have a downtrend, which is what you expect when you're looking for relative weakness. But we do have some relative recent price strength as it's pushed off this low. And as I said in the last video, we do want to see something like a higher low and a higher high. I think we're getting a higher low right here. We haven't yet gotten the higher high. If we look back at this little trading range that's going on here in the last couple of months, we're still looking for a breakout of that. So I would still hold off on buying this. It's maybe going to shoot out tomorrow. That looks like it might. So I would mark down AXL on my yellow legal pad and set that aside for further research. Now, I also can note over here that it's in the auto parts industry, so that's a company that's it's adding value to the culture. It's not producing alcohol, or it's not a gambling company, or those sorts of things that I'm going to avoid. So that doesn't rule it all out just yet. Now, I would have to go to the website itself, which you can just click on the company name here. It'll take you to the company website to do a little bit of further research on the back end of what's going on in the corporation itself. And so that's kind of what we do. We just look at some charts, quickly scrolling through, making note of ones that seem to be breaking out from some consolidation at the low end of things. We don't want stocks that are still selling off like this one here. We do want stocks that are basing near their recent highs and look to be in a breakout mode. Again, stocks like this one selling off sharply, we don't want that. Trying to look for a company that I might just rule out altogether because of mission and corporate values concerns. I don't see anything right off the bat. A lot of oil companies now, because they've been beaten down so drastically with a falling oil price, and starting to make a comeback. And of course, they have loads of revenues going on, strong sales, low price to sales ratio. That's why they're showing up on our list. Okay, so the next thing I do, I take my short list. We're actually in Tesoro. We've been in it for several months now. We bought it back, back in 2014, I think it was, and it's been doing very well for us. So what I would do is, if I liked this chart, I would then go to the company website and take a look at that. But another thing you can do is take a look at the full spectrum of fundamentals here, and we can look at all of the valuation metrics. We can see that it does have a little bit of debt, which is a little bit of a concern, but it's making a ton of revenue, has super low price to sales, very low price to earnings ratio. It's growing EPS at 133%. This past year, it has been growing sales at almost 20% over the past 5 years. The last quarter was great. The analyst recommendations at 2.4, which is a little bit higher than what I'd like to see. I'd really like to see it at around 2 or even better than that. But it still has about an 18% upside based on the target price. Now, then you'd want to scroll down and take a look at some of the headlines. Here's some CNBC, IBD, TheStreet.com, Morningstar. And you want to look at to see if it's being positively mentioned. And a lot of times, of course, it'll be just mentioned as a sidebar to the main story, so you can dismiss some of that. But we see a headline: Tesoro poised for growth on refining strength. Tesoro's big bet on building crude by rail infrastructure. Big new U.S. oil terminal could change everything. These kind of headlines are showing momentum in favor of further upside, so all of that is good stuff. And finally, of course, you're going to whittle all that list of 15 down to maybe 1 or 2 that you really, really like, that are poised technically, that have great headlines. Analysts love the company. Growing strong sales, low price to sales ratio, and of course you love the mission of the company. You feel good about what they're doing corporately. All you need to do is the next open, buy some shares. All right, that's it. The 6 steps to building your best long-term stock portfolio. God bless everyone, and we'll see you soon. Bye. Hey, if you like this video and want to see more like it, click right here to subscribe to this channel. And if you're watching by mobile phone, click the link below. Do us a favor, like this video, and tell us in the comment section what other videos you'd like to see in the area of trading and investing. And just for watching today, I want to send you a free report, the 6 steps to building a winning portfolio. Click the link right here and leave us your email so we'll know where to send it. If you're watching by mobile phone, click the link below. Thank you and God bless. Stay tuned to our channel for more videos just like this one.